Hello and welcome to GoodGood Investing. My name is Rachel Grunn.
And I'm Andrea Cwik.
Thank you for joining us for another week of GoodGood Investing. On this podcast, we love to share tips and tricks on how to scale your investment portfolio through alternative investments using the syndication model. So, a few weeks ago, we did an episode all about tax depreciation and why um, the tax code really incentivizes investors to pursue syndicates in especially the commercial real estate world. So today we're going to dive a little bit deeper on an adjacent topic, which is called the real estate professional status.
Yes, and you're a real estate agent. And so, do real estate agents actually qualify automatically?
Well, a lot. So this episode might be frustrating because everything we're going to say also talk to your tax professional because we're not tax professionals. So it also depends on the tax professional that you talk to. So some say, yes, if you're a real estate agent, like that is rep status, like you're good to go. Others say that you still need to have material participation in the syndication that you are claiming depreciation on. So let's back up quickly because also you do not have to be a licensed real estate agent to be a real estate professional. So that's also a
Ah,
caveat.
yes, I
You do
wanted
not.
to call that out. Yes, okay. So, you can't be a real estate professional like me. I am a full-time real estate investor, but I do not have a license to be a real estate agent. But from my CPA and tax strategist, this is a good way to go about um, for your taxes how to file because my husband, who has a W 2, I can even offset his income with real estate professional status. So there's a lot of benefits that we'll get into of why real estate professional status for tax purposes and what qualifies you is super important.
Yeah. So just to back up about what the implications of rep status are. Um, if you guys have not listened to the tax depreciation episode, I think it's like 3 or 4 episodes before this one. Just pause, go listen to it. It's super quick. It's like 8 minutes long, and it'll just kind of break down what depreciation is and why it's a really cool tool to use to offset your taxable income. But in that episode, I do say that your passive losses can offset your passive gains. So if you get depreciation on an asset, you can use that to offset your passive income on that asset. You cannot use it to offset your ordinary income from your W 2 or your 1099 unless you are a real estate professional. Again, that does not mean you have to be a licensed agent, right? Um, Talk to a tax professional, but the tax code says something equivalent to as long as you spend X number of hours per year working on real estate related activities, you can qualify for rep status. Now, it's really hard to qualify if you have a W 2. It's really hard case to make for to the government. Like, hey, I work 720 hours a year on real estate and I have a full time W 2. They're kind of like, probably
One
not.
Right, one has to be more predominant than the other. And actually, you know how I'm a part of a lot of different masterminds and stuff. And so, I talk to people at my mastermind, and my mind was blown because when I was doing real estate investing and just starting out, I was taught the 750 hours. You need to log in the hours, you need to show, what you worked on, when you worked on it. But it could be going to meetups, conferences. It could be your research on properties. It could be taking your realtor out to lunch, those things, but log the 750 hours. But then when I went into this mastermind and I was talking to people, they actually said that as long as you have an Airbnb that you are actively managing, which means that you do not have a property manager, which Rachel, we have cabins in Broken Bow, Oklahoma that I manage myself. So then I found out that I don't have to even log the 750 hours just because I'm managing those properties. I'm able to automatically, and I don't have a W 2 job, or do anything else. This is my life, real estate investing, that I would be fine not even logging in the hours because showing that I property manage those properties are enough.
Yeah, I have heard of the Airbnb hack in that way as well. And also, you can offset your spouse's income if they have a W 2. Also, not all CPAs are created equal. I know that I think it was you, Andrea, that had an investor come to you and say that. Correct me if I'm wrong. Could have been you or could have been someone else that say that their CPA said that there's no tax benefit to investing in real estate,
In
which is
fact,
crazy.
yeah, and also there are some CPAs that actually, even though they're credible, I forget the name of this one large CPA firm. They work with a lot of real estate investors, but then they tell their people, oh, don't claim the rep status because you're going to get audited more often. And I don't know if that's true, but everyone in my circles, they want those tax savings, especially for their spouse. So I think
Yeah.
it works. Just again, check with your CPA. But I believe that there's too many tax benefits to not claim that status, and it's there for a reason. Why would we be scared?
Yeah, exactly. So whenever, if you are serious about pursuing syndication, rep status, I think, is definitely something you would want to look into, or maybe your spouse would want to look into. And it's also really important that when you're interviewing CPAs or you're talking to your current CPA, that they fully understand the syndication model of real estate. They fully understand bonus depreciation, the real estate professional status, because it's not to say your CPA is bad or inadequate at all. This is just a very specialized type of investing. It has very specific tax implications, and they're constantly changing. So it's just important to have a CPA that's really proficient in this specifically.
Yeah, and as a bonus, so we're giving you this information because one, it's definitely changed our lives in terms of how much taxes we pay. Our goal is always to pay zero tax, and of course the legal way, and our tax strategist helps us do that. So it's a bonus to look into for you. But also another one is cost segregation analysis. That's another way to offset taxes as well. And whether you have a primary residence or in the syndication model, for commercial properties, that availability of a cost segregation analysis is, always there as well. And it's another way to get tax savings if you haven't looked into it already.
Yeah. This is just really sophisticated stuff that billionaires are doing to avoid paying their taxes. And we just want to share the wealth and knowledge with all of you that maybe have not heard about something like this. Like we said 100 times, it is very complex, and every CPA is going to have a different opinion on what qualifies as rep status. So yeah, just be careful. You could get into the weeds, but it's worth it. It really is. Like if you
Yeah.
find a way to claim this, it really is so worth it. Take it from two people who have done it before.
Yeah.
It is awesome. Any parting thoughts about rep status, Andrea?
So then, for you, I just want to break down, like, on a personal note, are you able to claim rep status because of real estate only, or also because you are a general partner in the syndications? What does your CPA say?
Both. So, because I mean, real estate is my profession. I work for myself. I own a real estate business. I'm a realtor in Dallas. So that's, I mean, the IRS would never question if I don't have to log hours. It's my full time job, right?
Yeah.
So there's that. But my CPA actually is a little bit stricter. She does say that I have to be actively involved on the active side of the syndicate in order to claim that depreciation on our ordinary income. So her opinion is that passive investors do not get to claim depreciation on their ordinary income even if they have rep status. So again, every CPA is different. All the syndications that I invest in, I'm actively involved in, so it doesn't bother me that she's that, strict like that. But again, I would just recommend, I don't know what the tax code says. I'm just going off the professional that I hired. And this is what she does, is a lot of syndication. They work with cost segregation companies directly. So I just kind of take her word for it. And it's been amazing for our family.
Yeah, and when you say ordinary income, you mean W-2 income.
Yeah. Yeah, correct. So, well, it also means my 1099 income, because I'm 1099 in my business because I'm a contract worker.
Got it.
So by ordinary income, I mean I can offset the income I make from my real estate sales on the residential side, and then income that Dylan makes as well. Um, but if I didn't have rep status, then I would only be able to use my depreciation benefit towards whatever passive income I made on my investment. Last year, I mean, we closed on properties last year, so we haven't made income yet from those properties. So I would, if I wasn't able to use that depreciation towards my ordinary income, I would just have like a bank of depreciation, and I would just be waiting for income to start coming in to start offsetting it with the depreciation. But I went ahead and just used all the depreciation in year one on my ordinary income. So we paid very little in tax.
Yeah, and then from a passive investor standpoint, if they are not actively managing the syndication, they are still getting income. At some point, they'll get income from the syndication, and that bank, quote unquote, that has stored depreciation, you can use to offset the income whenever you get it from the syndication.
Yeah, and it doesn't expire. You don't have to use it year one. You can use it whenever. You can use it however much you want. And you can just tax plan, and see how much you want to write off. Maybe you are looking to get a loan in the next couple of years and you don't want to write off a lot of money. That's something you can discuss with your tax preparer as well.
Yeah, absolutely. Well,
Well,
great.
great. Awesome. Well, thanks guys for tuning in. And we hope that you can apply this information to your life and save money on taxes, stop giving everything away to Uncle Sam, and grow your wealth while also claiming losses. That's like the ideal, right? To make gains while claiming losses. That is awesome. And that's what's unique to real estate. That's why we love it so much. Well, until next time, guys, don't invest good.
Invest twice as good. Bye.
Bye.